Hey guys, welcome back to the channel, and today's video I will be discussing an idea that I came up with recently. So the idea is about since Elon Musk has owned both Tesla and Dogecoin, I came up with an idea to compare that both. Okay, so let's find out what I have found. So let's go to the chart. So you can see that I have added this Tesla chart over here. Okay, I added this Tesla chart here and this Dogecoin's chart. Okay, so it's simple to understand, guys. So the thing that I spotted, see that Tesla has pump here. Okay, it has started to pump from here. Okay, so if you see the Dogecoin, it has started here. Okay, it has started here. So if you see the interval between them, it's about 287 days. Okay, it's about 287 days. So what I came up with is this Tesla movements. Okay, if we predict the Tesla's next movement, then we can easily predict the Dogecoin's movement. You see, if we could predict the Tesla's movements, I mean long-term movements, then we can invest in Dogecoin very smartly. Okay, so you can see that Tesla stock is predicting the Dogecoin's movement early. Like this is a very big interval. You can see it's about an year. Okay, it's about an year. So if you see the second example, you can see that the market dump. Okay, see the market, the Tesla had 34% dump here. Okay, I indicated that here, 34% dump. So after 126 days, what happened? The Doge also dumped heavily. Okay, so this is the interesting part. Okay, so the same thing goes. See, we are having a 1 year gap, and here we are having 126 days. So if you go further, you can see that the last halving. Okay, the last halving, the Tesla's pump started here. Okay, the Tesla's pump started here. And what did the Dogecoin did? It started here. The interval was 154 days. And then guys, you can see that this movement, this Tesla's movement only was given here. Okay, this Tesla's movement only was given in this period because Tesla is predicting the Dogecoin's market very early. Okay, so this movement only, this Tesla's movement only was the result of this Dogecoin's. Okay, so if you take a look, so this movement, this correction, okay, this correction happened here. Okay, this correction happened here, and the starting of the another one, the starting of, if you take a look, this pump here, it was there, right? This pump, you can see this pump, right? It started, okay, it started here. I am talking that this correction was in the result of this. Okay, this was the reason for this correction. Now for this pump, we had another pump here. Okay, you can see that clearly, right? I'll just mark the starting point here. Okay, this pump is there, right guys? This pump is there, right? So I'll mark the data. See, I have marked the data. So it was 121 days. The market predicted 121 days before the pump. Okay, before the Dogecoin's pump. You can see it clear. Tesla started to pump here. Okay, at this level. And what happened? After 112 days, the Dogecoin pumped. Okay, you can see it clearly, right? The data is clear. So guys, if you take a closer look at here, okay, you can see that the Dogecoin, okay, the Dogecoin started to dump very heavily here in this level. Okay, if you pay a close attention here, the Dogecoin has heavily dropped from this price for 0.4 level. Okay, 0.44 level. Okay, if you take the Tesla, if you zoom out the Tesla, this is the period, the starting of the dump. So if you see the Tesla here, we can see that this was the start. Okay, so how many days it was predicted? It was 35 days before the dump was predicted. Why I didn't take this as a dump was there was a rejection. You see the rejections. If the Tesla pumped here, guys, from this level, then Dogecoin also can pump. The days are coming very short. You see, first it was about 1 year. okay, and the second time what happened, it was 126, and the third time we have 154 days, and the fourth time we have 112 days, and the fifth time we have 35 days. This could happen even in 2 days or 1 day, okay. So I'm not saying to invest, do your own research. This was my idea on the market. So before investing on any financial market, please do your own research, okay, at your own risk. So if this Tesla, so let's go to the Tesla chart and let's see how far from where the Tesla can pump and to what level can it reach, okay. So this was my idea, okay. With the previous data, I'm saying the market doesn't repeat always, but it rhymes, okay. It predicts what's gonna happen in next. With the past data, we can say the movements, okay. So let's go for the Tesla. It's on Nasdaq, okay. This is the, if you are choose the Nasdaq, okay. You can see that Tesla Nasdaq, okay. Choose that. So if you go with so these are wave types, right? So I prefer trading this with Elliott waves, okay. So if you go with this, we can see that we have this low, right? So I'll start from here. So we have this low. So this was impulse. So that is too much data. We don't need that much data. And this was a correction, and this was a impulse, okay, and a correction and an impulse. So I'll start from here, guys. So if I take the market from here, we have this impulse move, okay. I'll consider as 1 and 2, and a correction, that was a correction. In another impulse it was 3, okay, and we had another correction, okay, and we have fifth wave. Why I took this as a fifth wave? Because in Elliott wave it could happen, okay. So this is a possible thing, okay. If the market didn't break the third high, it's called as truncation, okay. You can research that. So and what we had, so this is a leading diagonal. So if you consider this is a leading diagonal. If you are good in Elliott wave, you know the meaning of that leading diagonal. I mean starting of the first wave. So if you consider like that, so the leading diagonal, it forms the first wave, okay. So the first one and the second one, okay. Here we have the third and the fourth, and the fifth should be somewhere in this box. So I'll explain you how it's possible. So I'll just undo this drawing, and let's make the color different. So if you take with the fib levels, okay, so this is our low, right, and this is our high. This is the second wave, okay. If we are measuring the second wave, so it has come for the deep level. It has retraced very deeply here, 0.6 level, between the 0.6 level and 0.78 level. If you measure the fourth wave, it's also very easy. This you should take the second wave. Before that, let's measure the third wave, okay. So was it reasonable to go that far? So I'll just extend, okay. So the third wave was a possible one, because this third wave was extended. So it was a good reason for the market to come here, okay. The third wave was very impulsive. So these are the zones that should consider. And if you take a look, guys, and this is the fourth wave. If you go with the fourth wave, if you are going for the fourth wave count, here we have it's in the this did not retrace very deeply. It's in a 0.8 level. This is a normal level, and what happened, it has pumped from that level. So if you are Elliott wave trader, you know that this is the leading diagonal, right? So end of the fifth wave, what should happen? There should be a ending diagonal, okay. So that also count as 1, 2, okay. The third could be here, and the fifth can be completed like this, okay. So this is my scenario. So this is a leading diagonal. Okay, so we had this first wave mitigation and the third wave is on the way. So let's measure where the third wave can lead. So third wave is possible for this 1 point. This is the common area. 1.6 level, fib level is the common area. If it breaks, okay, we can show that it will reject from here, because I'm not predicting the market exactly like a god, right? So it can break and go retest and break and go retest. It's on the market. If the market goes here, then it's good for Dogecoin. Okay, it's good for Dogecoin. So if the third wave is extended, then the market can go even higher. Okay, I mean the fifth wave will be going higher. So this is the common zone that the fifth wave is possible to reach. So I'll just draw that also for you. I'll start from here to from here. Okay, so go for the fifth one. You can see that these are the levels that I consider. Okay, this is the common level. It has reached and gone for a pullback. So if this break up, okay, if this breaks up, then it could go for these zones. Okay, it can go for this zone. And if market, okay, think in both scenarios, guys. So if you think in both scenarios, it's good for yourself. So if the market breaks, okay, so this is a good trend line here. This is a good trend line. Okay, we have this mitigation. I started from here. So this was resistance, and we have so much of mitigations here. Okay, so if the market manages to break this and go down, okay, so then the count for ending diagonal won't be that much, because the third wave is already extended, right? I have shown you that the third wave is extended already. Okay, I have shown you that. So this was the 1.6 level is the least. Okay, this only should be the third level's target. So what happened, the market has extended so much. So for the market can make a, I mean the market can drop from here also. It's a reasonable thing. So if it drops, then it could go for a correction, a small correction, and then can go for an impulse, another impulse. Okay, so it can even break this level, can even break this 100 level if it breaks, but let's see what's happening in the economic market. So this was the bearish scenario. The same goes to Dogecoin also. Okay, so let's go for the Dogecoin analysis also. Now I am on Doge chart here, guys, on monthly. So the same structure is happening here. If you notice in Tesla, you can see that same structure is here. So I'll mark this line here. Okay, so it will be useful for me. And if you consider that, let's go for the daily chart. Okay, and I started from this level. Okay, because that's gone, these levels are gone, so I started from here. So the first wave, okay, this is an first wave. Again we had a second, another time we had this was a theory. Okay, so if it goes for a retest like this, then we can see that we have this impulse again. Okay, we have this impulse 1 2, we have this very big 3 and 4. Okay, that's it, I drew this. And if you take this big picture, guys, you can see that second wave. Okay, and what did the market has done? It has completed the third wave, but what happened for the fifth wave? It has been closed low because the third wave is extended. So it was reasonable for the market to close below the third wave's high. Okay, this is a common thing that is this is a rare thing that happens in the market. So if it is overextended, then market, if the third is overextended, the market can the fifth wave will be lower than that. Okay, So that's it, I consider this as fifth one. And if you take a closer look, we have this correction pattern here. Okay, but if you take ABC here, okay, we have ABC like this. You don't need to take ABC because this fifth wave, right, this is the fourth one and this is the fifth one, so it did not close above the third one, so it's possible it was a reason for the market to make an impulse again. So this is a correction and we have another impulse, and now still we are in a impulse. Okay, and you can see that we have this first impulse wave and a correction and a impulse, third wave and a fourth wave, and then we had another fifth wave. Okay, this is the leading, so not leading, if the third wave is reached for that common target, then you can see that the fifth ending diagonal. Okay, this is how the fifth wave will be ended. Okay, in the starting of the first wave also it goes with 1 2 3 4 5, it's in leading diagonal. In the ending of the fifth wave also it goes like this. Every time it won't go like this, you can notice in the low time frames. So let's see what's happening with the current market. Okay, so you can see that market is forming this triangle, okay, triangle pattern, and since this is the fifth wave, okay, the fifth wave is completed and this zone is the buying zone that I kept. If the market manages to break this level, okay, this A level, okay, if the A level is broken, then the market can go higher, should break the higher level. Okay, should break the higher level. If not, if the market this is the first scenario for bullish, guys. The what was the scenario? The market should break the A waves high, so the market can go for a impulse. Okay, impulse can come for a correction and then go for an impulse. Okay, it's all on the market's future movements. So this was the bullish scenario. If the market goes here somewhere, okay, in the 70% or 60% and fall back, then we can expect the market to go lower. Okay, and can go lower. So if that works, if it market go from here, drop from here, then that is a C wave, and you can see the 1 2 3, you can see that same thing here. Okay, you can see the same impulse move again. Okay, so if the market, okay, that was the scenario number 2, which is a bearish. This part is over. So if you consider this line, okay, this line was mitigated so much time. Okay, mitigated so much time. So if this break, okay, we have the descending trend line as well here. Okay, we have this descending trend line here. So I'll explain that in another chart. Okay, you have this descending trend line that is here. So if the market breaks and break this level, okay, don't enter the market when it break and retest. You should wait until the high is broken with a strong bullish candle. Okay, patience is the key. So if that happens, the market can climb higher. Okay, market can climb higher. Since the market is in a good support level, so we can expect a bounce as well as a dump also. Okay, I have said the two scenarios, so keep that in the mind, guys. So that's it for the video. I'll end up the video for now, and I hope this video was very useful for you. I gave the idea that I bought up with Tesla and Dogecoin because Elon Musk is owned both of them. So let's see you on another video. Until then, goodbye, guys.